Taking a look at Fisker stock, some awesome development has happened. Broke through a downward trend resistance line. This is just one of the awesome developments. So went up to the upside, got knocked down. That's the first touch point. Went up again for the second time as a second touch point, then got knocked down. And then the third time went up again and it got knocked down. So 3 touch points. It's a valid downward trend resistance line, but then it broke through it. And the reason why it broke through it in after hours, by the way, is because Morgan Stanley stated that they reiterated their $40 price target for Fisker stock. But then the main reason why it went up is because they put out a new bull case for their price in terms of their price target for Fisker stock, and that's at $90. Now, technically, this is hypothetically a little bit too optimistic, but it is a valid. Usually, when they make these bull cases, everything has to hit right for it. So it's not necessarily they're saying that they're expecting it to hit $90, but they could see a potential for the stock to hit $90 if everything that they're assuming does happen. So if we go back to the stock right here, we notice that when we break through a downward trend resistance line, usually it's a good sign. And there was an instance where it wasn't, and I'll explain why. So it broke through a downward trend resistance line right here. Every time it tried to go past it, it got knocked down multiple times. And then when it finally did break through, it bounced off it and went up to the upside for a pretty decent run from roughly about $9, almost a little shy of $9, to, let's just say you didn't decide to hold from there, about $18. So almost double your money right there. If you decide to hold longer, it would have been $23. And then again, it was a downward trend resistance line, then consolidated, and then went up to the upside. Now, this was the instance where it was a massive downward trend resistance line. I myself was anticipating a good run up. Instead, it spiked up and then it dropped. But this is the significant part of it. During this time, the overall market also dropped and the stock was extremely shorted. Before this drop right here, Fisker stock, from what I remember from my recollection, it was shorted about 20%. But then when it was right about here, it was shorted about 25 to 27%. The stock was shorted an additional 5 to 7%. In case I'm wrong, let's just say 5%. That's a massive amount of shares being shorted for a stock in terms of percentage-wise. And then also, if you look at the S&P 500 right about here, let me go back to Fisker stock actually first, just to show you the date. Right about here, so this was in May 11th, right? So during this time, I'm stating that the market in general, not necessarily was crashing, but it had a massive drop. So right about here, yeah, May 11th, the market dropped. So it was a massive drop too. So you have that in conjunction with that the stock of Fisker stock was being extremely shorted and taken advantage of, hypothetically in terms of short positions during that time. So you had that massive drop right after the fact. Otherwise, in my opinion, it would have had a massive run up, but it was held back. But then we saw the run up after, then on after. Now we're in the same case right now, but I don't see, well, it could be the same timing, unfortunately. Actually, if you saw my stock market video, let me just show it right here for a sec. There's a channel right here that dates back since 2008, 2009, and there's a downward trend resistance line right here, and then there's 2 support lines. So basically, it went down to this support level, went up to the upside resistance, got knocked down, didn't bounce on support, but went up to the upside, got knocked down, went down, bounced off support, went up to the upside, got knocked down by resistance. The reason why I'm stating this is because we couldn't pass this resistance line the whole entire time, and right about now, we are approaching the same resistance line dating back since 2008, 2009, but more predominantly in 2010 when we went up to it hypothetically the first time, and then we're approaching it right now where we might come back down, have a pullback, which would kind of be a disappointment for Fisker stock, because right now, in my opinion, I think there's going to be a good run up, and I'll explain why further as well. So if you look at the one thing I want to show too, this was perfect timing, because otherwise if this did not come, if you look at the 5-year chart, this is the MACD line. This is indicating that if it's a bearish or bullish movement. In terms of the 5-year movement, it was actually in the bearish case. It went over to the negative, so it was not optimistic, and it was the bearish movement, so indicating potentially more downside. Now, because it reversed the upside, I'm going to go to a closer graph in terms of the 1-year chart, which is a better representation for this time being. Then right now, yes, it's still in the negative, it's still a bearish movement, but I'm pretty sure, in my opinion, it's going to most likely cross over to the positive, becoming a bullish run overall. And right now, with the RSI chart right here, you could see this indicates if it's overly sold or overly bought. When it's on the top side, it's overly bought. When it's on the bottom side, it's overly sold. It's closely approaching the oversold territory. Now, it does not need to cross over to this point Does not need to actually like come down to the overly sold territory, but this is quite significant. But before I continue, quick disclaimer, I'm not a financial advisor, I'm not a professional. Everything I do share with you is just my opinion, it is not advice, so please do your own due diligence and research before buying and selling. Now, the reason why this is significant in terms of if it's overly sold or overly bought is because you can see these two instances right here, more specifically this one, when it was overly sold, you could have entered at the best entry position point where it was like roughly, I know it went lower, it's just because this graph, when it's like, for example, the 1 year chart or the 5 year chart, the price points are compressed. So it went lower than $9.99, $9.93. But either way, let's just say that was the point, and then went up to roughly about $20. So you could have doubled your money in a few months, all within this year, if you were anticipating that you were entering at the lowest price point. And let's just say you got like in a way duped, because this was another low entry price point. You could have entered at $12.40, held strong, or sold at $15 somehow, anticipating that that was the peak, and then it dropped down to $9 and still held strong all the way till 20. It would have been fine. Now here's another low entry price point. You could have entered at $9 again and went up all the way to $20. So multiple times where it was a low entry. Now the thing is though, it does not need to be at the overly sold territory. There's like in a way the extreme case. It could be in the mid-range. So right about here is the mid-range, and you could see it consolidated and went up to the upside for a massive run-up. And again, right about here, not really consolidated, but a short period of time, and went up to the upside again for a massive run-up. Now, the reason why I'm stating all this stuff is because this is still relatively important, because right now, in conjunction with breaking the downward trend resistance line, in conjunction with the 1 year MAC line indicating that potentially it could cross over to the positive, becoming a bullish movement, which could be coinciding with a bullish run. For example, right about here, it crossed over to the bullish territory and had a decent, indicating a decent run up is coming, and it went crossed over. Now, it does not always mean that's the case. Right about here, the MAC line crossed over to a positive territory. Yes, it had a small run up, but it wasn't that great. It was short-lived and came back down to the negative. So there's that. Now, the question is, how high will it go? And there's quite a bit of resistance that we're going to have to pass first, because right now it's $15.03 on August 9th, 2021. After hours is roughly around $16.80. And there's going to be some issues passing these price points in terms of horizontal levels. I'm going to just draw a quick line right now for the time being. This is just an amateur line. Please bear with me, I apologize. But you can see it spiked up right here, got knocked down a couple times to try to pass here. Yes, there's false breakouts. I'll elaborate more on that as well. But then went up, got knocked down, went up, almost got knocked down with a false breakout right here. And then there was this instances where it couldn't pass it right about here. And then that's basically it for the most part. It bounced off of support as well. So it's going to cause, there's going to be issues passing roughly. I remember when I measured it, it was like around, it was like 1680, 1650 to 725, 730, 750 price point range. But then after that, it's going to have issues passing around the 1880, or sorry about that, 1818 or 1820 or $18.30 price point range, give or take. So all the way, essentially, because I think it's going to hit $17 relatively quickly, it's going to be anywhere between $17, $17.50 to $18.20, $18.30, where it's going to just either consolidate between that price point for a little while or have issues to pass and then get knocked down. I don't think that will be the case though. I think most likely what will happen is it's going to go to the next level, which I think is going to be the case, which is roughly about $20 price point, and I'll show why. So right about here, if I just draw a horizontal resistance level, again, I apologize, these are just amateur lines I'm just drawing right now real quick, but you can see it spiked up to roughly about, $20.16 or something. But keep in mind, these are just amateur lines. These are just ranges for price points. It's not exactly going to hit 2016 and drop, but roughly around that price point. And again, it went up again and hit roughly about $20, got knocked down, and we could see a spike up right here, again the $20 price point, and got knocked down. So I think that's what most likely going to be the case. So just to visually show you what I mean, let's just say it's going to have issue passing this first price point around $17.35, probably consolidate a little bit, then go up to the $18.16, 12 cents, consolidate, and then finally go up to the $20 price point. Now, can it go higher? It could. The only thing is it all depends on how fast it goes. Personally, I don't prefer for it to just spike up, because usually if it spikes up, for example, it spikes up, it's just going to come back down almost hypothetically just as fast. What you would probably want is like a steady growth where it's just like over time it builds a solid base and then goes up to the upside. But again, Profits is profits. So if you could hypothetically get out at the peak and then average down later on or something, or get the brand new positions on the lower side, easier said than done though, so keep that in mind. So be careful with that. Now another reason why I think it'll pretty much go to $20 per share, pretty much almost guaranteed in my opinion, keep in mind this is just my opinion, is because Fisker stock is extremely shorted. So if you go to Fisker right here, statistics, go to percentage of shorted shares, it's at, for floated shares, it's 20.37% as of July 15th, 2021. And for shorted shares of outstanding shares, it's at 10.92%. Now, I usually look at floated shares anyway, and this is an extremely shorted territory. You get extremely shorted territory when you're at 20% or above. And the reason why that's significant is because if it's extremely shorted, there's more of a chance at least one of the, for example, hedge funds or whoever's shorting it will be more obliged to cover their shorted positions, because their risk tolerance is different than not everybody's risk tolerance is the same. So not all hedge funds or whoever's shorting the position is going to cover at the same time. They're going to all adjust based off their entry position and their risk tolerance. So when it's an extremely short territory, there's more of a chance where whoever's shorting their stocks will decide to cover. Somebody will decide to cover, and then it could be like a domino effect where if one decides to cover, the share price starts spiking, and then another one starts to cover, and the share price starts spiking even more, so on and so forth. So that's basically it. Thanks for watching. I appreciate it. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. If you like this video, consider dropping a like. It does help out the channel, so thank you so much for that. And if you like this video or other stock videos I'll be posting in the future, like financial videos as well, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching, and I'll see you in the next video. Peace.